I would now like to provide our assessment of the growth and inflation scenario. First, I would like to take up global growth. The global economy continues to face daunting challenges of elevated inflation, high levels of debt, tight and volatile financial conditions, continuing geopolitical tensions, fragmentations, and extreme weather conditions. Belying earlier apprehensions, a number of economies have demonstrated remarkable resilience, and the grim prospects of hard landing appear to have receded. Nevertheless, global growth is likely to remain low by historical standards in the current year and also in the next few years. Despite upward revision in the global growth forecast for 2023 by the International Monetary Fund. World merchandise trade volume growth is projected by the WTO to decelerate from 2.7% in 2022 to 1.7% in 2023. Headline inflation is easing unevenly across countries and remains above the target in major economies. While the pace of monetary tightening has been scaled down, policy rates could stay higher for longer. Financial markets, which had been buoyed by expectations of an early end to the cycle of monetary tightening, have turned volatile with sizable two-way movements in response to recent rating events and incoming data. Turning to global growth, these external factors are likely to impinge on the growth prospects of most advanced and emerging economies. India is, however, expected to withstand these external headwinds far better than many other countries. The momentum of overall economic activity in India continues to be positive. On the supply side, crop sowing has picked up with steady progress in the southwest monsoon. The temporal and spatial distribution of monsoon has, however, been uneven. Industrial activity is holding ground, as is evident from the latest data on Index of Industrial Production, that is IIP, Core Industries Output, and Purchasing Managers Index, that is PMI for manufacturing. Buoyant services activity is reflected in healthy expansion in e-way bills, toll collections, railway freight, and a sharp jump in services PMI. On the other hand, commercial vehicle sales and domestic air cargo traffic contracted during Q1 of the current financial year. Aggregate demand conditions continue to be buoyant. Among urban demand indicators, domestic air passenger traffic, passenger vehicle sales, and households credit are exhibiting sustained growth. In the case of rural demand, tractor and fertilizer sales improved in June, while two-wheeler sales moderated. High growth in agricultural credit and improving sales volume of major fast-moving consumer goods, that is FMCG companies, suggest incipient recovery in rural demand, which will be reinforced by improving Kharif prospects. So what I have done under growth is that first I highlighted about the supply conditions, the supply side factors. Then I have highlighted the aggregate demand conditions consisting of both rural and urban demand. And let me now turn to investment.